We have seen this unemployment rate below 4% for a whopping 27 months. That's the longest stretch going back over half a century. And we don't see a lot of signs of softening. When you sort of dig under the hood, you look at the report, for example, we've seen that for women who are between the ages of 25 and 54, sort of the working age population, their labor force participation and their employment rates have hit series high, going back to 1948 when Rosie the Riveter went home. And of course, we also saw the black unemployment rate fall last month. So when you dig in, you actually see signs of people coming back into the labor force. You see, a strong labor market overall at that steady pace that we need to see at this point in the economic recovery.
So slow and steady have been the magic words from you from the get-go, Heather, as we've been talking about this since the very start of this administration. As we consider the idea of a soft landing, is this actually more the definition of stable growth?
This is what you want to see at this point in recovery. You know, our analysis at the Council of Economic Advisors is that you need about 100,000 jobs per month just to keep pace with population growth. And at 175,000, and 240 some odd thousand over the past 3 months, we are certainly above that basic pace. And, we continue to see healthy gains in wages. They've been abating in recent months, but certainly you see those steady gains and particularly those stronger gains for the bottom 80% of the labor market that are production and non-supervisory employees. These are the kinds of gains that we want to see month after month, people being able to go out there and get a job, that low unemployment rate, those jobs that are being available, but yet not so hot that it's overheating the economy.
Well, Heather, speaking of what we've seen month over month, as you alluded to, the statistic, 27 months in a row with an unemployment rate below 4%. When you're modeling out what's going to happen to unemployment as we move forward, when are we going to be breaking above that 4% level?
Well, I'd like to see us break the next record in that streak, so it's not just going back for more than 50 years, but going back more than that. Certainly, the president's goal from day one was to get people back to work, keep that unemployment rate low. That is what helps boost wages across the country, makes it easy for folks who are out there who want a job to get into the labor market, to find that work, to switch jobs. And so we certainly want to see that unemployment rate kept in that low space. It's one of the goals of what we mean by a strong, stable jobs recovery. And I just want to emphasize that one of the things that we've seen that I think has been really impressive in this recovery, of course, has been that we've hit these historic lows for black unemployment rate, for in the gap in the unemployment rate across states. We aren't at those lows right this month, but we have seen those, over the past year. And being able to see this kind of recovery that's giving so much opportunity to people all across the country in a way that is equitable and is, reaching into pockets of the economy. This is exactly what the president wants to see. It's good for the American people.
Well, Heather, I fully understand that the president would like to see unemployment remaining below 4%. It's just a question of whether or not that's going to continue to be realistic if we're talking about policy that is still tight and the lagged effects of the tightening that we have seen starting to kick in more substantially. I just wonder if realistically you think unemployment can stay this low if rates still remain this high for much longer.
Well, I cannot comment on Fed policy, which I think is implicit in this question. I think, what we are looking to see is, the president has made all of these investments all across the United States, investments in infrastructure, investments in new technology and manufacturing and good jobs, and we are still seeing those play out. We have had these very high numbers for investment in the construction of new manufacturing facilities. We are seeing, shovels in the ground for all these infrastructure projects, and so I remain optimistic that as we see this recovery progress, we'll be able to keep this kind of steady job gains. We've been able to deliver this for years now, and this is the economy. It's been the little engine that could, but we have a lot of investment that still is yet to come, and hopefully that will give some strength to the labor market. And we're starting from a very solid foundation here.
Spending time with Heather Boushey, who's talking with us live from the White House on Bloomberg TV and radio. Heather, we started the program with a special conversation with the former St. Louis Fed President Jim Bullard. By the way, this is not a question about Fed policy, don't worry. But he did say that a soft landing for the U.S. economy is in view. Do you agree at this point? Is it already happening? Is this the type of report that confirms that?
Well, as we have seen month after month, and I've talked to you and folks around the country about this, this is that kind of stable growth. A soft landing implies, that we already know exactly what's happened, that it's in the rearview mirror, but we're living this in real time. So I think that, as we watch the data, as we always do, this is the kind of the recovery we want to see. And, of course, on top of it, we have seen that, prices have come down 60% from their peak. We've actually seen over the past year the prices for some goods facing consumers like milk and eggs and used cars and airline fares, those are lower than they were a year ago. So we have seen some relief for families over time. And I think combined, this is the kind of, trying to find that sweet spot where you keep growing and you keep adding jobs and you keep making sure that workers receive their fair pay.
Heather, we were speaking earlier this week with someone from the Groundwork Collaborative. It used to work alongside Elizabeth Warren when we were talking about the way that Fed policy, which I won't ask you to comment on directly what the Fed should do with this policy, but the way that it is transmitting in the economy. Now that we have seen something of a stagnation in progress in getting inflation down, it bears questioning whether or not actually just pure interest rate policy is going to be able to get us that last mile down to 2%, or is it going to take something else like more action from this administration?
Well, this president has remained committed to lowering, pain points for families in terms of prices across the economy. He's taken a series of steps, for example, on junk fees, making it possible for, consumers to not face those fees that just add up, those hidden fees. I often think of, what the Consumer Financial Protection Bureau has done with credit card fees for consumers. But that's just one example of the variety of the ways that the president is focused on lowering prices. Think about what he's done to lower prescription drug prices, lower the price of insulin, lower the price of health care for families. All of this adds up and gives relief to families' pocketbooks. The president has been focused on creating these jobs and addressing real problems facing families all across the country.
Heather, it's hard to underscore the impact that immigration is having on our job market right now. It's borne out in the numbers, and I wonder to what extent the White House will make the case in the coming months, in the coming days, that immigration is an important driver of our job market and is in fact having an impact potentially for the better on inflation. How would you answer that?
Well, the president came into office. He had an immigration plan that he released on day one. He has worked to find sensible solutions here. Certainly what we want to see in the labor market is you want to see those folks who are on the sidelines, who want to get into the labor force, get access to those jobs. It's why I pointed to the fact that you have this historic high in labor force participation among women between the ages of 25 to 54, and you've seen good numbers on labor force participation more generally. That's people coming into the labor market, seeing those economic opportunities.
Heather Boushey,